It's no secret that the FOMC interest rate decision is coming out this Wednesday, September 18th at 2 p.m., and it is arguably the most important catalyst of the year because this may be the first rate cut since the Fed began raising rates in March of 2022. The huge market patterns I'm about to share with you likely hinge on that decision. Just like I covered in my last video, on the ADD we had this falling wedge pattern and we had an initial false breakout. It came back down and we finally got this double bottom that led to this massive rally that started on 9/11. And my thoughts and prayers do go out to the many people who lost loved ones on that horrible date. What I'm seeing happening in the markets, what has formed, are a bunch of symmetrical triangle patterns, and we're going to go over multiple charts to see what those pattern targets are. We have to zoom way out on the daily chart of SPY to see it, but we're looking at a potential upside target of around 621 if this breaks to the upside, or a target of around 480 to 485 to the downside, which actually has confluence with this rising wedge pattern target that we've been going over for weeks now. And if we throw up a quick trend line, we can even see that the RSI is confirming a bit of a symmetrical triangle pattern here based on higher lows and lower highs. And if we zoom in further on the 4-hour time frame, we can see that SPY is very close to this main upper resistance line. We could potentially see SPY come all the way up to around 564 to 565. And if this resistance holds, we could see it coming back down and touching somewhere around 546 to 547 before the actual FOMC federal interest rate decision comes out. If we switch over to the ES S&P 500 futures on the daily time frame, an upside target for this pattern would be somewhere around 62.45 to 62.50, and the downside target would be around 48.50 to 48.60, which again has confluence with the pattern target of this massive rising wedge pattern we've been covering. Also, interestingly enough, this right here shows the open interest for these contracts, and you can see there has been decreasing interest in these contracts going up through September, which could be considered a form of bearish divergence. It's interesting to see if we have increasing open interest moving into October. And when we look at the same pattern on SPX, we are seeing a potential upside target of around 6,200 and a downside target of around 4,900, which, wouldn't you guess it, has confluence with the rising wedge pattern target. So this does seem to be indicating the market would like to go lower rather than going higher first, but we never truly know. And real quick, if you missed my thesis on what I believe actually led to the August 5th market crash and what is literally running the markets right now, I'm linking that video above, and we'll also link 2 more videos after it that I discovered that kind of creepily seem to confirm my thesis. If I'm right, there is far more corruption going on behind the scenes than most realize. Once you've checked out my other video, make sure to come back to this one to see the pattern targets for the rest of these massive multi-week patterns that have set up in the markets. Taking a look at QQQ on the daily time frame, we have a very similar symmetrical triangle pattern that has set up. The upside target for this is targeting somewhere around 548 to 550 with a downside target of around 386, which again, very interestingly, has confluence basically with the target pattern of this rising wedge pattern that is on both QQQ and SPY. And we can see that on Friday, price briefly breached above this main resistance line and then rejected sharply. Taking a look at the /NQ, which is the NASDAQ futures, we have an upside potential target of around 22,600 or a downside target of around 15,500. We can see on the RSI that we have a bit of a bearish divergence that has formed on this daily time frame, and it looks to have formed a bit of a descending triangle, which in many ways often turns out to be a bullish breakout pattern. And as we can see, as of the recording of this video, the futures have actually broken and gapped above this resistance line and are all the way up to around 19,770. But we'll have to wait for confirmation to see if this resistance can now be flipped into support Otherwise, this could potentially be a false breakout followed by the real move down. And I think that price would have to get above this key level of around 20,000 even. If you're loving these clear patterns and targets I've been providing on a weekly basis, please remember to like this video for the algos and share it with someone who might benefit. This is not financial advice, and you should never make financial decisions without first consulting a financial advisor, but it would make sense to me if someone wanted to play the FOMC rate decision to either get strangles or straddles at least a week out from Wednesday, September 18th. Why? Because IV Crush would likely eat away at any profit someone might get if they bought short-dated option strategies, whereas once the market actually picks a direction, one might benefit from having longer-term options. Again, please do not make a trade based off of what I said, as I am not a financial advisor and these are just my personal opinions. So looking at option strat, so if we build the straddle based around the basic current price of around 560 on SPY, we can see that if we grab, let's say, the straddle that is expiring on October 18th, and the market moves either down to our price of around 490, or if it moves up to our price of around 620, we could stand to potentially gain around $5,000 if it moves all the way down, or around $4,300 if it moves all the way up. And of course, if implied volatility were to increase during that time, we would definitely see more profitability on either side of that trade. And you got to keep in mind that these patterns have taken 9 weeks so far to form. So whichever way they break, it's also going to probably take at least 1 to 2 weeks to play out minimum. All right, so if we're taking a look at Nvidia on the daily time frame, you can see obviously it is inside of a symmetrical triangle pattern. Price could technically come all the way up to around 127 to 128 before even meeting resistance. And we have an upside potential target of around 169, 170, and a downside target of around 67, which would actually fill this daily gap that occurred on February 21st. We covered this pattern on Amazon in a previous video. It looks like it chose a direction on the symmetrical triangle, and it is likely still targeting around 210 to a 211 per share. I'm keeping in mind that even in a recessionary environment, companies like Walmart and Amazon can be defensive because they offer affordable goods that everybody needs. Meta on the daily time frame still looks to be forming a bit of a rising wedge pattern. One could potentially argue that it's more of an ascending triangle, but we're looking for breakout targets of that of up to around 677 to the upside, give or take, and around 343 to the downside, which would actually fill the daily gap from February 1st and line up with minor support. Microsoft on the daily is still targeting around 343 to the downside if this big rising wedge pattern is valid. Of course, you got to keep in mind that the pattern targets actually can move from wherever it pulls back up to and then begins to move back down. Whenever you see very impulsive moves in one direction, they typically correct pretty rapidly. This sharp move up seems more reminiscent to me of a short squeeze, and if it is, it will come crashing back down. TLT is right at strong resistance right now. There's this old descending channel that TLT is right at the previous support line of, currently acting as resistance. If it can break through, and if this ugly inverted head and shoulders pattern actually plays out, then TLT is targeting around 114 per share, and it could potentially go much higher. Again, it probably wouldn't reach this previous resistance until around 122, 124, give or take. Alternatively though, if it rejects off of this strong resistance, I could actually see it coming back down to retest somewhere around 99 and then possibly even somewhere around 96 before potentially moving higher again. And I don't believe it's just a coincidence that many CEOs, including Nvidia's Jensen Huang, and genius investors like Warren Buffett have been dumping record numbers of shares into the market. You simply don't do that if you believe there is much more room to run, or in other words, if the reward outweighs the risk. They know what the risk is. If the carry trade or possibly any number of other currently hidden trades unwinds rapidly, we could see a market crash unlike anything we have in decades. If we get a 50 basis point cut, it could have the unintended effect of unwinding multiple carry trades, especially the Japanese yen carry trade. And just as a quick reminder, I'm limited in time throughout the week to make full videos, but I do take the time to share things in real time that I see setting up on the markets, both on YouTube's community tab as well as on StockTwits and X. Just like what I shared actually just 3 days ago, I actually shared the pattern that we're covering in today's video. If you don't want to miss these crucial updates, please make sure you've subscribed and tap that notification bell. And without further ado, let's get into today's trading rules to live by.